welcome to all our viewers in Nigeria and around the world to Business Point on Global Television, where we x-ray Nigeria's economy. We talk about tech, government policies, and innovation. I am Agaba. Today, we'll be discussing a topic of immense importance to Nigeria's economic landscape, which is managing foreign exchange exposure in the Nigerian economy. As the Naira continues to fluctuate against major global currencies, businesses and individuals alike face significant challenges in navigating the impacts of exchange rate volatility, from inflationary pressures to rising costs of foreign exchange, rising import costs of foreign exchange exposure, and affect nearly aspect of our Salawuddin would join us to explore what foreign exchange exposure means, its impact on Nigeria's economy, and the strategies needed to manage these risks effectively. Just after this break, please stay with us. Many thanks for staying with us. If you've just joined us, this is Business Point on Global Television, and today we will be looking at how businesses and individuals can navigate the impact of exchange rate volatility with our guest on the program, Karim David Salawuddin. Good morning, sir.
Good morning. Thank you for having me.
It's a pleasure to have you on the program.
Thank you.
Now let's look at foreign exchange exposure, what it means, and why is it a critical issue for the Nigerian economy, particularly at this point in time?
Thank you. Basically, businesses, anytime you have something to do in terms of transactions that involves currency aside your domestic currency, maybe another country's currency, you already involved in kind of foreign exchange, because for a couple of reasons. You are going to pay people, for example, if you are buying, you are going to pay them in their own currency, which means technically one way or the other, you have to look for their own currency and pay them in their currency. And if they are paying you, they also, that is, if you are making maybe income or revenue from there as well, so they are going to pay you in your own local currency. So one way or the other, there will be an interaction whereby one currency is exchanged for the other. So this creates an exposure for businesses, and we can have a couple of cases whereby individual, for example, you have children that's schooling abroad and their tuition is due, and you need to pay, let's say, British pounds or USD, for example. So you need to pay them because that's the currency they are going to accept. Now, in a situation whereby at the beginning of it, maybe a session of the school, the exchange rate is like maybe $1 is 1,000 naira. But before you know it, it's a matter of a couple of months down the line, when you are ready to make commitments in terms of school fees, it has now go to like $1 equal to 1,200 naira. So that's, you're already exposed, because maybe by reason of your budget or your capacity or your projections, you are looking at $1 to 1,000 naira. But now you are going to incur about 20% extra cost. That is at individual level. When you look at business input, if your business is exposed in terms of your inputs, your raw materials, or you will have staffs that are not in this country, that are maybe that are based in UK or US or in any of the European countries anywhere. So you have to pay them in their currency. And if based on your budget, at a given time, point in time, is what you have, because you work in Nigeria, for example, so your transaction is denominated in Naira. So, and you've already calculated and know that this is how much you're going to pay them. If there for any reason the foreign currency rise against your local or domestic currency, you're already exposed. Your cost goes high. So that is, these are the business entities. These are the entities that are involved, individual and then the businesses. They are economic units that are involved, and this is the manner examples of how they are exposed. So because your cost can suddenly go through the roof. You understand? So that is as serious as that. Yes.
We know how much Nigeria relies heavily on oil exports. Can we look at how our reliance on oil exports impacts this volatility, particularly in the global market?
Nigeria, actually, you are right for that, your comment. We are commodity, we operate a commodity currency, a commodity economy, and it's oil. So this is it. For example, any commodity economy is tend to have a volatile currency. And this is because of the fact that you are exposed to one or a few commodities. So when the price of those commodities move globally, definitely, it's going to impact on the revenue drive of the country, and it's only going to impact what country stands to execute in terms of project. And it's only going to impact in terms of what the country or Nigeria, for in this case, has as part of building their reserves. So imagine if the oil falls and maybe from, let's say, $100 per barrel to, let's say, $70 per barrel. So if the budget of Nigeria is benchmarked to $100 per barrel, and now you are down by 30% cost, so which means that you have to look for extra 30% to execute the project. We are that exposed. And that's so when the oil prices rises and it is well managed, so it's good for us because it means we have more, dollars in our coffers. But when it falls, we are equally exposed vis-a-vis what are the projects, our expenses, expenditure we want to execute. And remember, whether if we have more dollars or foreign currencies in our maybe in our reserve in CBN, it means that it enables the CBN to be able to carry out when an importer, for example, want to take a transaction, or somebody want to import things. So CBN will have enough dollars at disposal to easily execute that or to give through the commercial banks. So, but if that is not enough, like we do have in cases in recent cases, or we are trying to show off situations, so that gives us exposed even as a country. So running a commodity like oil has advantage and disadvantage. The advantage is when the price is going in your favor, so you are good. But if not, then there's an issue because that's the main source of your revenue.
Thank you very much, Mr. Karim. Let's look at policy and regulations, particularly because we're talking about the CBN now and the role thus far the CBN is playing or has played in managing foreign exchange exposure. And then if there are any key policies in place that can mitigate the currency risk.
Now, the CBN is trying, actually, to be very frank. Let's take a tip from this. There is what we call some of the instruments being used to hedge against exposure include forward contracts, future contracts, then swaps contract, currency swaps. Now, if you those who have been following CBN very well, they've been trying to put in place what we call forward contracts. That you can just go there and then through a particular channel, as in BMDQ, if I'm not mistaken. So you go there, you have an exposure, you step there and you say, okay, do you know what? I foresee that I have an transaction in 6 months' time, and it's looking like in that 6 months' time, Naira might fall against US dollars. So I need to hedge. I need to maintain an exchange rate that I know is reliable. I'm not exposed to volatility. I think they put that in place. And recently, I understand that they are looking at, because forward contract is a contract between you, it's OTC, over the counter. It's a contract between you, it's custom made. It's not something that you throw in the open market for anyone to just pick and use. So it's between two parties where we agreed on future dates of what exchange rate you exchange one thing to the other, one currency for the other. So CBN has actually put that kind of things in place to help businesses. But I must equally indicate that if you look at the level of exchange rate needs for Nigerians in terms of importation, for businesses, importation for consumption, and vis-a-vis, what we are earning, there'll be issues. And don't forget, CBN equally has a debt servicing that they have to do. They have to look at as well. So they have other things that they're looking at. So we may not end up having that kind of sufficient currency, even so such policy I just explained now forward contract, it was put in place as a mechanism to manage that kind of situation. But notwithstanding, I think there are some recent policies now whereby we are trying to ensure that the individual that do not have any genuine businesses, genuine reasons to hold maybe dollars or foreign currency should release it, should let it out. In fact, as a matter of fact, you could be arrested from what I got, information I got. So it's as serious of that, so that you don't just have people holding on to currency that doesn't bring economic value to the entire for the common good of Nigerian economy. So I think from that policy angle and instruments, at work or in operation like forward contracts, they are trying to fix all those situations. But we can still do better because, as I speak to you now, the options, the futures contract enables you to be able to, it's a standardized contract and you can be traded on exchange. So it's everybody have access to it. As long as you have access to the market, you just go there and see how you can hedge. I understand in current development that CBN is fully trying to see how they can execute that as well, but the final approval have not come out. That is the update about that. They are trying to put instruments in place, from my opinion, and some mechanism and policies to make sure this is well managed. So I believe with fundamentals of our economy, is further solidified, we'll get there. But I must indicate that it's not going to be overnight. They have instruments, they are putting policies in place, but it's not going to be gradual, so that we can get to where we really want to be.
I was going to ask, how effective, these policies have been, but like you rightly mentioned, that we will get there. But let's look at business and corporate impact. Over time, we've seen the exodus of multinationals, businesses, home-based and, and outside. How do these businesses in Nigeria, particularly imports-dependent industry, how have they been, or how do they manage their foreign exchange risks?
Thank you. That's a very, very valid question. Let me start from the part before I come to the local companies, entities, that how they
Can you hear me?
look at you. I can hear you. Can you hear me, please?
Yes, I can hear you. Please go ahead.
Okay, so I thank you for that's a very, very valid question. Let me start from the perspective of multinationals that are exiting our economy. The case in point, the recent one so far that I'm aware of is the PZ Cousins. The Nigerian subsidiary. I understand they are open for sale of the company because of the fact they have forest exposure. Now, let me just indicate this how effective is that instrument? Is like I said earlier on, it all depends on the capacity of the CBN. Because see, in a developed world, that kind of instrument can be obtained through investment banks like Goldman Sachs, JP Morgan, for example, Merrill Lynch, or Morgan Stanley's. So these kind of banks, they can execute that kind of transaction. But in Nigeria, it's only CBN that is doing that. You can understand the constraint. And the CBN is doing that because they are the one that have, in other lands, it's easier for them to obtain USD, especially in the US, of course, because that's their native currency. So, but in Nigeria, remember, we have to earn it. So, and CBN is the main gateway through this that comes in, and to ensure regulation and effective management. So, I think that's starting with them. And maybe down the line, so maybe other investment banks may be incorporated to come up with products that can do that. But mind you, one entity managing all manner of businesses and corporations that have exposure, it's not going to be that easy than when you have investment banks that are littered everywhere that can help, where you can just walk in through another one, through an investment bank and have exposure to what you want to do, whether you want to buy or go short or go long on an instrument. So, but this time around, it's only one entity. So, and besides, you clearly need to remember that the capacity of CBN is based on how much reserve we have. So we still need to work on fundamental and enough reserve as possible to make sure that this thing is effective enough to go around. it may be effective, but the question is the reach. How much people, how much can they accommodate? Obviously, when it comes to the local multinational or no, multinationals, it may not be able to accommodate, or they may not be able to have that kind of that go around or to meet all their financial or exposure needs. So we need to factor that. It may be effective, but it may not be kind of far-reaching enough. That is what I observed. And now we need to when you talk about local businesses. Now, how are they hedging it? Well, let's start from the instrument for hedging. And the first one has to do with forward contracts. And that's the type the CBN at the moment, I understand, they run. Now, that forward contract, like I explained earlier on, is just for between you, just for example, Mr. A go to meet Mr. B. Because I just tell him that, okay, this is exchange rate at the moment is 1,000 naira to $1. But in 6 months' time, I would like to have it at that rate. Now, Mr. B agrees to it. Okay, I'm going to agree on the price, the future price, and agree on the date in 6 months from now. And Mr. B is telling you that, okay, in 6 months from now, I'm going to sell it to you at 1,000 naira to $1. So it's between you and the other party. Now, that is forward contract. Now, there's a risk to that. It's one of the mechanisms, one of the instruments. So there's a risk to that. The risk is this, is that Mr. B will default. And another thing is the fact that it's an obligation. You have to honor it. Then the third one is the fact that if the exchange rates actually work in your favor? For example, it falls to 800 naira per dollar. You still have to pay 1,000. So you see, there are challenges with that, but it's still better because it creates some element of certainty for businesses. So at least they understand what their costs look like and their cost behavior and how to manage it. That's the beauty of forward contracts. That's one. The second one is futures. For example, futures is a forward contract, but there's a difference. Future is standardized, for example, and it's traded on exchange. I don't need to meet Mr. B, for example, so just say I want to have this one-on-one contract with you. I go to exchange it through my brokers and assess them and say, hello, for example, somebody comes to trade.com and say, you know what, I need to enter into future contracts. So then your broker will be able to let you know that, okay, this is what you open a margin account and get these things resolved. So you buy the the instrument, whether the currency you want to hedge against, in this time around, USD. So you buy them and you execute them through maybe the professionals that help you to run the account. That is how it works. So anyone can do that. You don't have to meet. You don't have to really know anybody to execute future contracts. It's standardized on the exchange. It's accessible via brokerage. But then we have the option. Now, I will need to point out that future contracts, they are marked to market on daily basis. So you have to open accounts. So as you are gaining usage, as you are losing, actually, you pay out. So, but at least you don't have this kind of challenges or the fact that you are constrained. You have this liquidity advantage. You can always go there. You can always buy. You can always sell. You don't have to meet somebody one-on-one. So these are some of the positive side of the features. Then we have the swaps, currency swaps. Now, what it means is that this one is equally OTC. It's like over the counter, individual agreement. It means that, for example, we agreed that, I'll be giving you exchange rate at, let's say, 1,000 naira to $1. But whatever, if it's more than that, you pay it into my account. If it's 1,600 naira for $1, you pay that to my account. But me on my own side, I'll be giving 1,000. But in a situation whereby it goes down, the differentials, if it goes down to maybe 800, I will still give you 1,000, but you give me the 800. What I'm trying to say is this: they are swapping the differences. You understand? They are swapping, the value of the currency. So if somebody has to take the risk, but at least another person's needs has to be met. So something along the line, that's what swap is all about. It's over the counter. You have to find a party that agree on that kind of a deal and with other conditions that come with it. Now, in Nigeria context, we need to indicate that for swap, currency swap is not a commodity that is flying right now. So but I know of forwards. I know futures is in the offing. It's something that they are trying to bring out into the open by government very soon. But for swaps, it's a little bit complicated. We need to equally understand that these kind of instruments, they are complicated. You need to have somebody that is sound in risk management, because quickly your run can go up quickly if you don't have people that can really use it, that have this dexterity skill to use the instrument. So those are three major instruments we use. But I want to mention two additional. There is this thing that comes up now. A couple of banks in Nigeria are giving it out. They call it a dollar fund. Now, dollar fund is an index. What it simply means now, you invest there, they will invest your capital into US, maybe a bond market, and some selected approved, CBN approved, I think, stock market, selected securities. They invest that to that. Now, what this means is that by the time you invest, your money is already in USD. So when you want to liquidate that, or when the time, because it's timed, so when the time comes and you want to reclaim your money, liquidate your position, so you are hedged against what's it called, the naira in the first place, against naira falling. At the same time, because they want to give you about 5 point something percent annual return. So a couple of banks in Nigeria are offering that. But there's one that I think that is equally very okay. That's my opinion anyway. Is what we call margin account. Margin account is done by businesses and corporations from Japan to US all over the world. Now, Nigeria may not be able to explore that, but Nigerians have advantage in terms of there are some custom you can approach it. Margin account simply means is that it's like dollar funds. You open a position with a broker, and you maybe put your assets in safe haven currencies, or for example, a US bond like US 10-year treasury bonds, or like gold. No, you will leave it there. Now, when you have this kind of position, because they are stable and they are upward assets, usually most of the times, you stand to appreciate in value, at the same time hedge yourself against dollar rising. So this margin accounts, maybe for those who cares, can exploit, because that's one thing about dollar fund I mentioned earlier, before I mentioned margin account, is that dollar fund, there's a time, a particular time you are supposed to execute it. If you execute earlier, you forfeit about 20% of your value of your position. It's not very nice. So, but the margin account, it has some level of flexibility where you can just, within maybe a week or 2 weeks, you can get to position liquidated, and you'll be fine, as long as those assets are invested in what's called stable asset, like maybe bonds and some selected securities. So those are the options available to Nigerians.
Thank you so much, Mr. Karim, for putting us through the options: forward contracts, the options, and then swap, and the role they play in managing foreign exchange exposure in Nigeria. But let's quickly take a quick break, and when we come back, we would look at the way forward. What reforms or adjustment will you recommend to improve Nigeria's resilience to foreign exchange fluctuations? After this break, please stay with us. Many thanks for staying with us. If you've just joined us, this is Business Point on Global Television, and we have been speaking with Mr. David Salahuddin Karim, who is a business analyst and has been putting us through the foreign exchange exposure in Nigeria. Mr. David, just one last question because of our time. Do you think diversifying Nigeria's economy would reduce the country's exposure to foreign exchange volatility? And then what reforms would you prefer?
Okay, I definitely, when we diversify Nigerian economy, is going to really help us to have a high level of stability. No, what it means is the fact that, just because a price fluctuation in one commodity will not make us to be shaky. So that is the beauty of diversification. I would recommend it any day. So we need to look at maybe the solid minerals, maybe agricultural sector. We need to look at other viable options that we have where Nigeria can earn very good for foreign exchange. That's going to go a long way to help us to have kind of stability. And let me put it this quickly. Another thing I want to mention is the fact that, currently Naira is not tradable in global markets. In all like US runs, I can go to use broker and say, okay, I can just go to trade.com and say, I want to buy US runs, USD runs, but I can't. When you go to there, you can't find them on brokers platform. Naira is not there at the moment. But I believe by the time our economy is diversified and has better solid footing, the whole world will know that where we are, and they are going to give us more opportunities for us to manage our economies. Then the way forward, the, the issue is going to take a process and time. So the way forward is I will recommend that basically, I will use the word recommendation. I'll just use advice because it's all that I don't look as if I'm trying to. But what I would say is this: for businesses that are currently exposed, you can try dollar funds, you can try margin accounts. Margin accounts is being run all over the world by the corporation and businesses. It's tested over the years across geographies. So you can try margin accounts with trusted licensed brokers in the world. Then you are good to go. Now, I must say this: the content of your margin account may not be exactly like what you obtained, like when you were in the US, but nonetheless, at least you can use that to improvise your position.
Thank you very much. Well, that's how much we can take on the program today. We do hope to bring you again on this platform to discuss further, and I hope you grant us that request.
I look forward to that. Thank you very much.
Thank you so much for your time with us. Have a great day ahead. Well, that's how much. This is where we draw the curtains on Business Point today. Don't forget to follow us across all social media platforms using at Global TV NG and other handles now showing on your screen. I am Queen Agaba. Thank you for watching and see you again.